Hey, it's Adam Sliver Trade, and today I want to go into my indicators, why I use them, the rationale behind using them, and how they correspond with time frames, and how I use time frames to not only look at the chart, in a different way, maybe try to zoom out and take a different view on something, but also how I use my indicators as that correlates to different time frames. So I've spent a lot of time in education trying to get across the way that I look at time frames when it comes to preparing for the day, right? When it comes to making levels, I'm always in the hourly chart. I mean, I go to the daily, obviously, just to get the overall trend. So you can see, we had this kind of upward trend line here, and AMD failed it hard. We had this, I'm just kind of mapping out trends, right? Just seeing what I think the big picture is here. But when I'm making the levels, because I know that I'm in a trade for not that long, and they're always intraday, rarely swing. I'm just working in the hourly and the 15 minute, and I like the 15 minute because it paints a bigger picture. It gives me more data points to look at. So while you may go out to the daily and you may not see my levels, I mean, you couldn't possibly see it because this is just one big candle. But if you go into the 15, you're going to see a lot more, and it's going to paint a picture that may explain a little bit more to you. So as for levels, okay, my main indicator is still the levels. That's it. The levels are where I enter, and the levels are where I exit. Right? I'm having my two trigger points, and that could make me take the trade either way. And then I usually have levels that I've plotted out on either the 15 or the 5 minute just as price targets. So suppose I say, okay, AMD under 112.35, that's where I'm going to take puts. I would probably put a price target right here because you can see the bottoms here and the tops here. And then maybe I can just make it another, a different color just to say, okay, this is my price target, right? And that seems pretty logical across here because boom, boom, we get a bunch there, get a bunch here as well. So it really makes a lot of sense for a price target. And if we were to make another one, maybe something like this, might have to be lower, probably something around there. Again, not perfect. We're not catching the full wicks there, but I kind of go along the way and just make price targets, and I'm always scaling into them. I just want to know where I need to start scaling into momentum, and since it's about $1 away, that's probably a good price target for me. But the bulk of my decisions are being made fully off of levels, whether it's entering, exiting, all of the above. However, I've gotten a lot of requests to talk about my indicators, so I am going to talk about them. These aren't decision making tools for me. These are more looking for confluence tools, or just confirmation on whether an entry or an exit, just whether it adds up, whether it passes the smell test. So first off, volume. Everybody uses volume. If you notice, AMD had high selling from the high volume just from the very beginning. Just it's all about relative, right? How is this volume down here relative to the volume over here, right? That's all that matters. And so if you notice, like there's heavy, heavy, heavy red, you can say, and there's upper wicks. You can probably gather that there's a lot of people that are pushing this thing down. And if you compare this volume to the volume over here, I mean, it looks rough, right? A lot more volume, and it's going straight down. That adds to the confirmation. So, volume's pretty simple. VPVR, so this is my volume profile on the side. And so if you go into TradingView, if you use TradingView, just go to indicators and type in VPVR for visible. It's called visible range. Yeah, just type in VPVR here. So what this is doing is it's showing these volume profile bars on the side. And so, this volume on the bottom is volume as it relates to time, right? So for this hourly candle, this is how much volume there was. However, what this is doing is this is doing volume based on price. So no matter what time frame you put on this, so whatever you put on the screen, the visible range on the screen, it's calculating, okay, how much volume was traded at each of these levels. So notice if I zoom out, it's going to change. So it moves, okay? Now if I go to the daily, generally if you're kind of thinking through a trade or preparing for the next day, what I'm doing is I'm zooming out enough to where I can get a good sample size. And for me, what I'm noticing is that this move right here had very low, like this move right here, you could have said from 120 to 116 was probably going to be a pretty easy move. And why is that? You're noticing that there's gaps here, and so the kind of overview of volume profile is if you see big volume profile bars, those are generally going to act as key support or resistance levels. That's kind of the way you can look at it. But if you see a place where there's very little, so for example here, from 110 to about 107, you'll notice that these bars get smaller. Okay, that is generally thought of to be where where the price would glide through. So it generally will go through smoother on an area where the volume profile is less. And this isn't like it happens every time thing, but it's another thing that can add to my conviction that says, okay, under 112, I think we can get as low as 107. And so the main thing is if you look for, you got the visible range, you've got a good sample size, and you say, okay, the volume profile is a lot weaker in this area. I think it can move quicker through that. But you know that once it hits a bigger area, like right here, look, once it hit 112, it bounced, right? Because it glided through all this low stuff, and then boom, as soon as it hit a place with heavy volume, you saw that it bounced pretty hard and it didn't go lower. So my thought would be if we get under low 110, which would kind of be around this area, it should be a pretty easy move to 107. And you can go into a different time frame here to kind of scope it out. But you notice that if the visible range doesn't even show anything below here, which, I mean, there you could do that, I guess. Same thing. It just looks better on the daily. But we'll go to a different chart to kind of map it out. You kind of want to, you don't want to just intentionally take, like if you did this, you're like, oh, well, there's no volume underneath there. You have to kind of show, you have to give it a chance to see what it's telling you. So what is this showing us here? I mean, maybe under 120. It could be a quick move to 117 is kind of what this tells me. It will be tough to get it back up here because it gets pretty crowded up in this area. It got rejected several times around 123. So it's going to be, for TSM to get back up, I think it would be a tough move personally, but it very well could happen. I mean, especially if you're breaking this trend line. This one just kind of likes to move in a range. So I wouldn't be surprised to see 117, even 115 maybe next week if the trend is downward, right? And here are my settings. Okay, so number of rows. I use row size 50, area volume 70. Here I use width the box 10%. So each you go up, it's just going to go more into your screen. I don't like it that much in my screen. I kind of like it off to the side. So I keep it at 10. And row size, I like it at about 50. And I think the higher you go, yeah, the thinner they get. So I like it at 50 because it makes them pretty thick. And I didn't touch anything here. Style, I took off POC. This will come on. I don't need that. And then where are my colors? I just made the colors just grays. Yeah, here. These are my colors. And again, all you have to do is type in VPVR. You do have to have a paid version. You could have the cheapest paid version, but you do have to have a paid version of TradingView. Next thing I use is the Ripster clouds. And again, these are just tools that kind of add to my toolbox. These are not anything that are helping me make decisions. It's more, oh, this is giving me confirmation to A, either stay in a trade, or B, showing me that I should probably scale out. So here, what I do, because these EMAs will change based on the time frame. So you have to be careful of how small and granular you're getting, because you could say, if I'm just looking for a red to green flip here, then suddenly I'm bullish, right? But you're not zooming out and realizing that if you're on any sort of wider time frame, this thing didn't even try to get above the EMAs. So I'll show you my settings. What I did was I um, took off the 4 and the 5. If you go to inputs, so I'm keeping the 1, 2, 3, and that's gonna be this. This is gonna be this right here and this right here. So I like these. I mean, I'm not an EMA expert, but I do like them to show trends. I think that they can be really helpful, especially when it reminds you to zoom out. Because if I'm in the 5 and I say, okay, how bullish does this look, right? And usually what I'm looking for is flips. So I want to see this red to green one is going to be a shorter time frame, and then this blue to yellow one is going to be a wider time frame. And usually these can act as key support or resistance. Like a lot of times you'll see it come up and touch these and then go right back down. And so if I'm in a trade and maybe it's going against me, this would kind of be my last level of defense. If I don't have a level there, which here we actually did kind of here. If it got up there and it was breaking through the resistance and also through this cloud, I would think, okay, I need to be getting out of the trade here. But what I'm looking at this for is I'm really thinking, okay, what's the trend? This is really just helping me get the trend. How much is this pullback, right? How much is this pullback up here really changing the trend? And to be honest, it's really not doing much. And then I'm also using it as confirmation to stay in. So if I'm saying, okay, I'm on the 15 minute, I'm chilling, I'm not really panicking. I'm noticing that it's holding these EMAs very well. Even here, though it's chopping, I'm saying, okay, it hasn't even tested them. And then it tests them and it falls, right? Same exact thing. Test them, falls, right? Test them, falls, test them, falls. Every single time it tests them and falls. So, but if you're too focused on the 5 minute, it might get you, each little pullback might get you stressed out. So if you're in a trade, the importance here, at least for me, is to take a look at all time frames while you're in the trade. Especially if you're green. If you're green and you've maybe already secured some profits and you're just trying to make sure you're maximizing the trade, take a look at all different time frames. First, I'll talk about my last indicator. I just use VWAP regular. I do the OLHC4. That one looks the best to me. Yeah, this is just VWAP. I turned off the bands, made it white. Yeah. So this one just looks closest to the Weeble one. So basically what I'm doing when I'm in a trade. So if I'm entering a trade, I'm pretty much staying on the 5 minute. Then once I'm in the trade, I'm staying on the 5 minute until two things. Either I'm substantially green to where I just kind of want to take in the big picture now, or if it was intended to be sort of a scalp or a really short term trade, I'll just stay in the 5 minute. But if I end up being substantially green and I say, okay, I've scaled some, I want to let my winners run, I'm going to be often taking a look at the 10, and I'm going to be looking at the 15 minute, because these are bigger picture trades, right? If it is that stress-free situation where I've scaled out some, I'm green, I can set my stop loss for break even, and really I see a lot of people that just have a problem with letting winners run. And I think the biggest thing to do there is just zoom out. If you've already taken profits and you can't physically have that trade go red on you, then why would you not just take the profits and then watch, just observe and see? And you can set your stop loss for 5% so that even if you get a bad fill, you're still making money on the trade, right? If you're green, you're playing with house money. So here, I'll tend to zoom out if I'm pretty green on a trade and just say, okay, let me get the trend. Let me make sure I know what's happening here. So, I can draw trend lines. I can just observe kind of what's happening, and I could say, okay, I say I scaled out into momentum here because this was a level. Great, perfect. Now it's kind of bouncing around, but it's still in a downtrend. If I'm drawing, say I'm drawing the trend line from here, or I can just draw a ray so that it makes it easier to see from there to there, right? Say I sell into this momentum, I know that this needs to chop a little bit and pull back to not only the EMAs, but also the trend line that I drew. So I'm not stressing out about this right here. I'm not stressing out about this green because it's not even breaking above the previous candle highs. And I know that once it tests this trend line, that's when I'm going to know whether it's a curling bottom or whether it's going to keep going down. So if I'm already, say I entered up here, I'm already green, I've already scaled out. There's no reason for me to get down here. And once we finally like you studied for a test and then you're taking the test, right? We're taking the test right here. What happens? Boom, fail, 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 right? Same exact thing over and over. And this should have told you not only your trend line, but your EMAs in agreement and the levels, the fact that it's under your level, you've already scaled. These should tell you not to get out of the trade and to let the winner run, right? There's no reason that you should have ever gotten out of this, to be honest. On Friday, I took Microsoft and I was in puts from this break right here, and I scaled most of mine out into momentum here because I had the 295.5 level marked, and scaled most out here, scaled a bunch out here, and then I kind of had some runners that I scaled out once it broke above the high of this candle here. So once I saw it kind of testing 297 again, I got out. But this one was a lot more choppy. Probably would have been a better trade to take AMD or TSM, but still made money from the flush, was happy about it. And so just before I wrap this up, the important part of time frames, I used to trade, a long time ago, trade exclusively on the 1 minute. If you do that, you're subjecting yourself to each of these little moves getting in your head and trying to fake you out, right? For me, and I'm sure many of you feel the same way, it turned to overanalyzation. There's no need to overanalyze the 1 minute moves because these things things don't go in straight lines. They'll go up, they'll go down. I think the 5 minute and maybe even the 3 minute, if you really need to wane yourself off the 1, go to the 3. But it's important to zoom out and just take in the bigger picture, and that's almost impossible to do if you're trading on the 1 minute. Even though I'm only in trades for a little bit of time, maybe 10, 15 minutes sometimes. The 5 will just show you, you can see, oh, there's a wick there. Okay, that shows weakness, here. Okay, it's not able to break. Okay, break down. We go back up to highs here. You probably thought if you're looking at the 1, there's like, oh, this is a trend. It's rounded the bottom and it's about to curl back up. But you zoom out and you say, okay, no, we're good. Say you held through this, okay? Now you're like, wow, I'm really green here. Now I'm just going to zoom out to the 10, really take in more of it and just grasp the wider trend. So you would have never gotten out of the trade, right? Zooming out just helps you not get faked out by super short-term moves. And it also just gives you a certain level of confidence, at least for me. Zooming out and taking in the broader picture helps me not only identify the trends better, but it helps me realize, where are my highs, where are my lows, where are my candle breaks, where are the most logical places for me to take a trade, exit a trade, and then where should I just sit tight? Where should I chill, and where should I make my decisions? So I'm constantly cycling during the day back between the 5, 10, 15, at least recently, because And I'm constantly drawing trend lines, I'm drawing levels on all of them, and I'm looking to see if each of the time frames agrees with that conclusion. So practice this week and going forward, cycling during the day between different time frames. Don't just focus on the 5 all day. Don't just focus on the 1 all day. Zoom out to the 10, the 15, 30, hourly, intraday. And just practice seeing what story it tells you, because it's all about the story. The stock market is telling us what it's telling us. We have to choose to interpret it. It is a being of itself. We can't say, oh, we lost 5 trades, we're definitely going to win our next one. No, the stock market is going to do what it wants to do, and all we're doing is observing the data that it's giving us, and we're making our decisions based on that. So because that is a fact, we have to make sure that we're taking in as much of the data that is relevant to our decision making process as possible. So we need to make ourselves available to this data. And by doing that, by scanning across multiple time frames, by using a couple different things that we like to help us make our decisions, we're being wise in that way, and we're making sure that we're not only tunnel visioned, but we're not focused on one thing to help us make our decision. Thank you.